Hey, this is Chris from Financial Modeling Education. Just wanted to say thanks so much for checking out the tutorial. I'm just going to take a couple minutes and walk you through the file so you know your way around. So this is an income statement template. I have it built out by month here. Of course, the years are fake, the months are fake. We're proposing that we have 1 year of history. These are flagged as the actuals, and the historical information is flagged in blue. And then it flips over to a forecast. You can see we have about 2 years of a monthly forecast here. And then when we get out even further to the right, everything is summarized by year. So we've got some annual results as well as year-over-year growth information and percent of revenue. So it's a 3-year monthly income statement is the big picture. If I come back over to the left, basically what we're doing is we're using the actual information as a frame of reference to forecast the future. And so some of the drivers that I'm using to forecast the future are over here on the left. And these are pretty simple assumptions because this is a template. I'm just using basic things like year-over-year growth, a gross margin assumption, or percent of labor or something like that, just working our way down the income statement. But we have the revenue up here, a few placeholder line items for different types of revenue, have the cost of goods here, the gross profit, as well as all the operating expenses down here. You can, of course, add or delete these or change them as need be. Again, it is just a template. And then we have an income tax accrual or an income tax expense down here, not an accrual, excuse me. And then an EBITDA schedule. We've got two of them here. One is EBITDA as defined, which is like the literal definition of EBITDA, earnings before interest, taxes, depreciation, amortization. And then we have a second EBITDA schedule called the management adjusted EBITDA, which is more discretionary in nature. These are one-time adjustments that management might include in the history, but that would never be in the forecast. And so I have some notes here, and you can see basically anywhere there's a orange cell with a little note in it, it's just telling you there's something unique going on or something different. And so illustratively, I've put a couple of one-time adjustments in here just so you can see how a management adjusted EBITDA might work. For example, this travel and entertainment expense, management is proposing a $50,000 add back. So if I go up to my income statement and look at the travel and entertainment line, I can see that in this same month I have a $75,000 expense, which is much larger than the months around it. So management is probably telling me with this adjustment here that this is a one-time thing that won't be recurring going forward. So that's sort of the thesis behind these management adjustments. Again, I just put in two here, illustratively speaking. And then that's the end of the file. It comes down here to a trailing 12-month management adjusted EBITDA because that's the kind of number you would ultimately need as a basis for valuation if you were ever going to take this thing out to market. So again, just to scroll out to the right to kind of close the loop here. 3-year model built out by month, income statement only. You can modify it as you see fit. It rolls up into annual results with some year-over-year growth as well as percent of revenue. So again, thanks so much for checking out the template. I hope you find it helpful.